But and look at how low it's gotten as low as $33 a share. So if you were consistently participating with this stock, you could make income all the way through this process. The option sellers are the ones who made money on this stock. The holders, if they just bought and hold, like let's say they bought here and just held until today, they wouldn't make any money. The only way they would have made money perhaps might be through dollar cost averaging. If you're buying the same amount, even when the stock is super cheap, then when the stock starts to rise again, which it has in the last year or so, you would make money. But I mean, look at those hills and valleys and crevices. That's kind of different from like I don't know, like a stock like Amazon. Let's see. I hope I'm right about this. Let's look at Amazon stock. Amazon is not as much of a drama queen. Amazon is pretty steady, consistent. It does dip sometimes. Here it's at 167. Now the price is up to 229. So you've had some good buying opportunities. But if you look at Amazon, other than this dip that took place in 2022, which was really a rough year, it's had a pretty steady rise. There's a big dip here, but for the most part, being an Amazon investor means you did well and you made money. Maybe not as much as you could, because 47% over 5 years is decent. It's not extraordinary, but it does give you a little less of a headache. But the downside of that is because the stock is less of a drama queen, it doesn't work as well if your goal is to generate income from the options. Okay, so let's see here. Two more questions, then we can bounce out. Okay, explain estimate commission. Okay, great question, Martinet. Estimated commission is the amount of commission that you're going to pay on the trade. It's usually non-consequential. It's a very small amount of money, maybe $5 on a trade for thousands of dollars. So it's not so terrible. But they always tell you what the commission is. Trading stock is much different from what it was 30 years ago in the 90s. In the 90s, they wrote, I mean, they wrote thousands of research papers about how transactions costs can affect investing, and then all that became a waste when you started getting like low commission, no commission trading from companies online or companies like Robinhood. They kind of threw commissions out the window. The only exception is like there are some apps that make a lot of their money from options. Like they'll charge a higher commission for people to buy stock options. And they do that because they know gamblers are easy people to make money from, because gamblers aren't really thinking about, paying, $8 to make a gamble versus $2. They're thinking about trying to win 300, 500, or $1,000. So Robinhood has been criticized for the fact that they make their money by selling their order flow. They sell their order flow to a company. I forgot who runs the company. It's got him Ken something that runs it, and it really was a little bit corrupt because really they're not supposed to do that. That's why they don't charge you anything, because they're selling. They always say that if what is it? If you don't have to pay for the product, then that means you are the product. And so with Robinhood, they sell the order flow to the market maker, who then is able to match the trades and all that. And what happened with Robinhood that was really, really problematic was years ago when GameStop stock started going up, up, up because they were trying to short squeeze or do a squeeze on the short sellers. Um, Robinhood basically stopped letting people buy GameStop or something. They just said you can't buy it anymore. You can only sell it. And they were artificially cooling off the stock price, in my opinion. And what happened was that the person that runs, I think it was Ken Griffin, if I'm not mistaken, he's a really rich dude. I think he was running the company that they were selling the order flow to, but this person also had a big, massive short stake in GameStop. So they were protecting him by not letting the Robinhood and sorry the GameStop investors short squeeze him, because a short squeeze, remember, a short sale means you sell first and you're trying to buy back later at a lower price, right? So they took this massive position where they sold a bunch of GameStop stock.